Hello ladies and gentlemen, it is the Wonder Kid here. A warm welcome to this video. Guys, today's video is going to be a complete guide to candlestick patterns, and this video is going to bode well as your candlestick training, okay? Now when it comes to candlesticks, now typically there are kind of three different buckets / categories I like to put them in. For example, single candlestick patterns, double candlestick patterns, and triple candlestick patterns. So as it says on the tin, single candlestick patterns are essentially single candlesticks that will tell you if we're going to continue momentum or we have a hint of reversal. Same with double candlestick patterns. Double candlestick patterns, of course, have two candlesticks that show a pattern and show either a likelihood of continuing momentum or reversal, and of course same goes with triple candlestick patterns. So in today's video, I'm going to begin this video by going through the single candlesticks patterns, then move on to the double and triple. But for those of you guys that already understand candlestick patterns, then I want you guys to look at the description below of this video and skip past all this training and look at my important message at the very end of this video when it comes to looking at candlesticks in the live markets. Okay, so guys, for those of you that are beginners and actually want to know about candlestick patterns, then let's continue and take a look at single candlestick patterns. Okay, so here you go guys. As you can see, I've brought up the price or the price action of the Aussie US dollar, and I'm going to start off by one of the most basic candlestick patterns known as the Doji. So the Doji is essentially, I'm going to bring out a Doji here. We can see that we have a Doji here, which is this green candle here, which is essentially you have a wick and you have the body which has opened and closed at around the same level, if not the same. Now what does this tell you about price? It essentially shows you that price either moved up and then it moved down and closed at the same level, or vice versa. We either moved down and then moved up and closed at the same level. Now, what does this tell you? It shows that this is indecision because we have a wick either side, meaning that we don't know where price will go. There's not a hint of sellers coming in and taking over. There's not a hint of buyers coming in. So whenever you see a Doji candle as a single candlestick, it is showing you indecision in the market. So we don't know what is going to happen, who's going to take over the market. Okay, so that is the Doji. Now, similar to the Doji, another indecision candle is known as the spinning top. So the spinning top is essentially where you have a body of a candle where the open and close are around the same level, okay? And you have a wick to the upside and a wick to the downside. Apologies for this drawing, it's quite dodgy, I know, but you get the gist, okay? So essentially when it comes to a spinning top means that, okay, we've opened and closed it around the same level, but we've pushed up and we've pushed down, creating wicks either side, showing indecision. So again, it's indecision. Why? Because as you can see from the body of the candle, buyers and sellers have not taken over in that period of time. Okay, so if I brought up an example of a spinning top, we can see that we have a spinning top we have a spinning top here. I'm going to bring up a nice good example. A spinning top would be, here is a decent example of a spinning top. This is a decent example of a spinning top. I'm sure you can actually look at this chart and find a better example. Oh, actually, here we go. Here's a nice example of a spinning top. This candle is a good spinning top. You can see that we've got a body. Even though the body in this scenario is bullish, it still doesn't suggest that buyers have come in. The body is very small and we've got wicks to either side, suggesting indecision. Okay, so that is an indecision candle. Now, one of the other very, very famous type of candlestick in particular is known as the Marubozu. So the Marubozu is essentially a thick body. So we can have this as bullish or bearish. So an example of a Marubozu in this chart, we can see that this is a nice bearish Marubozu here, and we can see a nice bullish Marubozu here. Okay, now what does a Marubozu show us? It shows that we've opened at closed and opened and closed at a very, very significantly different level, and we can see that there isn't much wick, if any, in a Marubozu, suggesting momentum, pure momentum. Okay, so for example, in the bearish candlestick Marubozu, we can see that momentum is continuing to the upside. Vice versa, with the bearish Marubozu, we can see that momentum is strong to the downside. Okay, so that is very, very key. That is the Marubozu candlestick pattern. Now, when it comes to sometimes what we like to call as a pin bar, but essentially when we have a body such as this and we have a wick to the downside, right? This is also known as a hammer. Now the reason being is because we've pushed down and we can see that price has tried to push down in this time frame, pushed up and closed at a similar level of the open, And this suggests that prices moved down in some direction but could not be sustained. So what is more likely to happen next in this hammer formation? We are more likely to go up, right? So for example, an example of this kind of hammer candlestick pattern is here. We can see that this is a nice hammer. We can see that in this time, in this zone, in this time frame, this candle in particular, price pushed down, created a large wick to the downside and pushed up and had a very nice close. So what is that telling us? It's suggesting that we moved down and we now have a nice likelihood of reversal and pushing up, okay? So that is an example of the hammer candlestick pattern, right? Now, vice versa, we can also have an example of something that like we call the hanging man, which is essentially where we have the body at the top, like the hammer, but we also have the wick down below. So this is exactly the same as a hammer, except this is positioned at the top rather than the bottom of a trend. So for example, we saw just before with the hammer that we had a downtrend, then we had the hammer candlestick right here, and then we pushed up. But we have also examples where we also can see that this hammer is at the top. Right here, we can see that, right? And this is at the top. So we can see that we've pushed up. We've had this hammer, but this is known as a hanging man. Now, for those of you guys out there that are just learning this, you can remember the names, but again, the names are not important as what is happening in price and surrounding price action itself, because you can see in this candlestick, it is exactly the same as a hammer. But ultimately, from this hammer, it suggests that, well, you know, normally because we've got a wick to the downside, we suggest to push up. But in this scenario, we've pushed down, okay? So this is known as a hammer, sorry, a hanging man. We can see that is normally at the top of a trend or a top of a push, okay? And then we have a push down. So that is known as a hanging man. Now, vice versa, we can also have something called the inverted hammer. Now, the inverted hammer is essentially the flip of a hammer and hanging man, okay? So with the inverted hammer, you'll have the open and close at the very bottom. So the body is small, but you have a wick to the upside, okay? Now, the thing to note about the inverted hammer is that it is normally seen after a downward move. So you have a downward move, you have this price action here, and then you have a push up, okay? Now, the problem with this pattern is that, of course, this actually suggests that the candlestick itself suggests that price has pushed up, couldn't be sustained, pushed down, but we still showed continuing momentum to the upside. So it is a kind of candlestick pattern that I don't really like to see because it doesn't really tell you the story. It actually tells you, hey, we're losing momentum to the upside. But if we're going to continue after, then this in particular candlestick is known as the inverted hammer. And a good example of the inverted hammer in this chart is here. You can see that this is a nice inverted hammer, this red candlestick here, because you can see that price pushed down. We had the inverted hammer, and although we had a large wick to the upside, we pushed back up. So again, this is a nice important note for you guys to understand, is that when you have a candlestick like this, even though you've got a wick to the upside, suggesting momentum to the upside could be discontinued and might not be sustained, we still continued up after it. So this is known as the, excuse me, the inverted hammer. Now, vice versa, if you actually have this candlestick pattern that is actually at the top of a move. So for example, if we have momentum up, you have this candlestick and then we have a push down. This is known as the shooting star, okay? So if I find an example of it here in price, I'm actually just going to keep this image here. We can see that we've got an example right here, which is really nice. Again, you can see it's exactly the same as the inverted hammer, but it is essentially at the top of a move, at the top of a push. So we pushed up, had this, which is a nice candlestick pattern to actually abide by because we saw a wick to the upside, suggesting price may not be continued in that direction. And again, we had a nice push down, okay? So there you have it, guys. That is a quick overview of looking at chart patterns or candlestick patterns as a single candlestick, and this is very, very important, okay? Now we're going to go on to looking at double candlestick patterns. So these are candlesticks that essentially have two candlesticks versus 3 or 1, okay? So for example, I'm going to start this off by looking at what we call a bullish engulfing, okay? Now a bullish engulfing is essentially where we have a candlestick that is engulfed by the next candlestick. So for example, I might just draw a simple candlestick here, but essentially the next candlestick is engulfing that candlestick. Now, we can have a candlestick that is like this. It can be any sort of candlestick, but essentially the total size of this candlestick, we can see that this second candlestick, the most latest candlestick, is completely engulfing the candle previous to it. Okay, now what does that show? Now to us that shows that, okay, well, depending on what you have as the second candlestick, it could suggest momentum either to the upside or the downside, but you can see that also ultimately it shows more volatility relative to the candle before, because if the candlestick before is quite small and the next candlestick is engulfing the previous candlestick, you can see that price is starting to move around. Okay, now depending on the body of the candle, this can be either a bullish engulfing or a bearish engulfing. Now what I mean by a bullish engulfing in particular is that this kind of candlestick formation is at the bottom of a move, because if we had price moving down and you saw this kind of double candlestick formation of a bullish engulfing, then this is suggesting that price will go up, especially if this second candle is green and is showing momentum to the upside. So for example, if I find an example in this price action here, we can see here is an example, a decent example of a bullish engulfing, because we can see that this green candle here is engulfing that red candle here but we can see that it is at the bottom of the move, because we can see we moved down here and then we started to move up. So that is an example of a bullish engulfing, because it is at the bottom of a move, right? Now a bearish engulfing is the opposite. A bearish engulfing is essentially saying that, okay, again, the latest candle is engulfing the previous candle, but it is at the top of the move. And this kind of chart or candlestick, double candlestick pattern is especially important when the second candlestick is showing momentum to the downside. So for example, if this candlestick here was strong bearish and red, then it is a high likelihood that we'll be moving to the downside. Okay, so I'm not sure if I can see any kind of bullish and bearish engulfings in this chart here. Actually, yes, we can see it right here. So here's an example right here, guys. We can see it right here. We can see that this red candle is more volatile than the previous candle and it's completely engulfed it, and it is at the top of the move. Why? Because we can see an up move here, and then we had the bearish engulfing and we saw a down move here. Okay, so there you go, guys. That is an example of the bearish engulfing. Okay, so like I say, a bearish engulfing is at the top of a move, and a bullish engulfing is at the bottom of a move. So for example, we have a down move here, then we have an up move here, okay? So now that is it for engulfings. And now I'm going to cover something called a tweezer top. Now, what is a tweezer top? Essentially, this is when you have, again, body like this and another body like that, and we have a tweezer to the upside. Tweezer tops is basically where it's a double confluence, because you've got two candlesticks where you've seen that price has tried to push up twice, couldn't be sustained, and we're likely to go back down. So this is known as tweezer tops, right? Now if I find an example here, we can see that this is a nice example of tweezer tops. Why? Because you've got candles with wicks of approximately equal length, and you can see that price tried to push up, couldn't be sustained, price tried to push up again, couldn't be sustained, and you had a bearish candle here, and the wicks are similar in length. Okay, that is a stronger confluence that we might reverse. Why? Because it is a double candlestick pattern. Okay, now same to the downside. If we had wicks to the downside, then this essentially is known as tweezer bottoms. Okay, so for example, if I find an example here, we can have an example. I know this is not as clear. Actually, we have a nice example here. We can see that you can see these double wicks to the downside and a push up. So you can see that this is actually what you have, a tweezer bottoms. What does that tell you about price? It suggests that depending on the time frame you're on, you have two candlesticks, a double confluence that price has tried to push down, couldn't be sustained, so we are more likely to go up. Okay, so that is tweezer bottoms. Now is the time actually for us. I think that is it for double candlestick patterns. We're going to move on to the triple candlestick patterns, but let's start off with the morning star. Okay, now essentially the morning star is where you have some sort of bearish candle. So let's say this is a red candle where we're moving down, then we have some sort of indecision candle, and then we have a bullish candle moving up, right? Now the reason why this is called a morning star is because, as you can see, we're going up And I guess you can think of it kind of like sunrise. This is how I like to think of it. We can see that in the morning. Yeah, well, it's morning sunrise is how I like to think of it. But essentially, it is where you typically see this pattern at the bottom of a move. Okay, the reason being is because you've had a bullish candle, then you've had a candle showing indecision. Sorry, a bearish candle, you had a candle showing indecision, and then a bullish candle. Now this shows that momentum possibly could have shifted, okay? So now, for example, if we try and find an example in this chart here, we can see that a decent example is here, guys. So if you look at these three candles here, you can see that we had a strong bearish candle, we had a doji / spinning top, and then we had a bullish candle here. And what does that suggest to you? So we can see that we had some downward move here. We had this formation and then we pushed up. So again, this is a candlestick pattern that is showing you a likelihood of reversal, and it is seen at the bottom of a move, okay? Now, vice versa, we have something called the evening star. Now, the evening star is typically seen at the up move. So we'll have some sort of bullish candle here. We'll have an indecision candle here, maybe sometimes some sort of spinning top or a doji, and then we also have a bearish candle after that, suggesting that we are likely to move down, okay? Now, an example of this in this formation, in this chart here, is here. You can see that we had this nice bullish candle up, we had a spinning top, and we had a bearish candle down, okay? Suggesting that we are now likely to go downwards, okay? So that is an example of the evening star, okay? And again, I like to think of it like kind of like sun setting, because we're starting to go down. So, you know, that's kind of how I like to think of it, but you can call it whatever you like. But it's essentially a reversal, a triple candlestick pattern that is showing you a reversal, okay? Now guys, I'm going to show you something called the three, it's known as the three white soldiers. Now, the three white soldiers is a triple candlestick pattern that is showing you a lot of momentum, okay? So it is essentially three bullish candles in an up move, okay? Now, this can be like, you know, you can have wicks to some of these candles, but essentially it is showing you three candles that are the same color, showing you a lot of momentum. Now, in this chart, we can see that we have it here. So this is known as the three white soldiers, okay? So it is a very bullish pattern showing you strong momentum. Now, vice versa to that, if we have these three candles going in the opposite direction, so you have some sort of bearish candle here, another one here, and we also have the third one down here. Again, these can have wicks, it may not have wicks, but essentially you're seeing some strong candles with thick bodies that is showing you momentum to the downside. This is known as the three black crows, okay? So an example here is here. We can see that we've got strong momentum to the downside, and you can see we started to continue that momentum down here. So this is a strong bearish momentum candlestick pattern, okay? So guys, that is what I'm going to cover, and that is all I'm going to cover when it comes to candlestick patterns. And in particular for what we just saw, triple candlestick patterns. I'm sure that in this chart, in this pre-sale price section, you can see all sorts. But now, here comes the important part, an important message, as I said at the very beginning, right guys? So we're gonna hop back onto the charts, and I'm gonna show you guys, as I like to go through my chart work, I like to show support and resistance / levels when it comes to trading. But I'm gonna essentially make a very, very key point when it comes to candlestick patterns for you new traders, and especially you more advanced traders as you're along your journey. You would have realized, especially for the more advanced traders, that candlestick patterns at support and resistance levels can be likely, but can also not be likely. So if you're very early on in your trading, don't just think that, okay, we're at some sort of strong resistance level where we're likely to go down, but there is no specific candlestick pattern, so maybe there is no move. Candlestick patterns are a kind of guideline to suggest what is happening with price. Now, as you saw, or for those of you that watched this video earlier on, where I just went through all the different types of candlestick patterns, yes, they are defined, that they have names, like I just went through the three black crows, or the morning star, the evening star, the doji, the spinning top. They all have names, okay? But I don't want you guys to get fixated on the names and just try and spot these kind of patterns. If you want to, you can go ahead and, let's say you just want to trade the morning star or evening star reversals, then go ahead, by all means, go and backtest that specific candlestick pattern. But what I mean by this is that when you're just looking for that pattern in particular, again, it's kind of looking for this kind of perfection in the markets where, okay, we have that pattern and we're likely to reverse. But the truth about it is that at reversals, you can have all sorts of patterns, and even the patterns that don't have names on, okay? So this is what I'm going to do, guys. We're going to hop on the charts. I'm going to show you some levels, and we're going to analyze what kind of candlesticks are at strong support / resistance levels / reversal points, which is very, very important, right? So guys, here we are back on the Aussie, and we're going to draw some quick support and resistance levels. So guys, I'm going to pull this back in time a bit where we've got some, we can see that we're actually in a pretty nice trend here. So guys, let's start to draw some support and resistance levels. So we can see that we've got a nice support level here. We've got a nice level here. We've got another level here. You can see that right there, right? So guys, remember, if you don't have practice at doing this, it is very, very simple. It is essentially just trying to find where you had a likelihood of reversal. You can see that we reversed at this direction here. For this level, we reversed here. We hit this one, reversed here. Again, this level reversed here. You can see that we rejected off here. So this is what I mean by levels, right? You can see rejection points, likelihoods of reversals. Now guys, this is what's going to be important. I'm going to zoom into some of these areas, and we're going to see what kind of candlestick patterns are there, if any, right? So let's start off earlier on. So let's see over here. So we're going to actually, I'm going to draw another level down here just so that we've got a nice level just here, because we can see that this is a nice strong level of support. Now guys, you can see, oops, so you can see, I'm just going to go back, sorry about that guys. We can see that down below in this level here, that can you guys spot any specific candlestick patterns at the reversals? Let's look here, let's look here, let's look here. Now remember guys, I've not seen this price action before at all, so I'm just looking at this for the first time. Now if I look at this guys, you can see at this level I can't see any specific candlestick pattern at all. Yes, we had the three black crows going down here, but again, what was the signs of reversal here? Ultimately, you can see guys, for me, I can't see any specific candlestick pattern here. We can see here, we had an inside bar here, but essentially, again, this is not showing a reversal. This is just showing indecision. We're seeing, again, look, a Marubozu down, a Marubozu up. Here, what are we seeing? We're seeing a bunch of spinning tops, dojis. Again, indecision candles, not candles that are showing us reversals. Same here, guys. Can you see, look, we've got some sort of inverted hammers. We've got some pin bars here. We've got a spinning top here. And then, of course, after that, you can see, guys, we had this strong Marubozu down and we had a strong Marubozu up. Actually, this is, of course, an engulfing candle. But essentially, you can see, guys, from this strong support level, there wasn't a specific candlestick pattern, right? So one of the things that I want you guys to understand is that when it comes to levels, analyze the whole price action and what's actually happening rather than trying to associate your mind with finding a specific candlestick pattern, right? So for guys, we'll see when it comes to price action coming down here, you guys should have noticed that we had a lot of wicks as a whole to the downside. Remember, that is not a specific candlestick pattern. That is showing you that price is trying to push down many times but cannot be sustained, so we are likely to go up, right? Now again, same here guys, look what happened here. We had price pinning into this support level here, pushing down, could not be sustained and pushed back up. So again, you're not seeing any sort of specific candlestick pattern, but you are seeing rejections of wicks at the level, right? So guys, let's go and find out more examples of this. So again, look, you may have a candlestick pattern here. For example, you've got a nice evening star pattern here, right? Again, can we see any other candlestick patterns? Again, you got another evening star here at this level here, right? We can definitely see that we have a level around here. We can see that we've got an evening star. But again, look what happened at that level. If I bring this down a bit, you can see that at this level, look, we can see, guys, we had an inside bar here, right, showing indecision, but not like showing reversal. Here, guys, we see that we actually spiked into this level here, and then we came fully down with a strong bearish candle. But this is not a candlestick pattern, right? Again, guys, here, this is a very, you could call this a strong evening star, but again, it's not an evening star to me because you have such a thick Marubozu down. Again here, guys, we hit this level here. Can you see any specific candlestick pattern here, like double or triple candlestick pattern? No. What you can see here is that price is pushing up with wicks into this with many different multiple candlesticks, but we're getting rejected. So guys, you know, you can actually just pause this video here and look at all this price action when it's hitting the levels, and you will have noticed that sometimes you actually do get the candlestick patterns, but other times you don't. So the key message here is that when I'm personally looking and reading price action, I am not looking at candlestick patterns in particular. I'm trying to gain a picture as a whole. So I'm analyzing candlesticks and wicks in particular, wicks and bodies of candles. And I think that is probably one of the most important takeaway from this video, is that despite the fact that I actually went through this video showing you all the different kind of candlestick patterns, single, double, triple, and I know that traders very early on in the game are going to try and find these patterns in particular, and you can trade off them. But for me, it again is trying to find perfection in the markets, but it is because it is not always the case at reversal points. As you just saw there, you don't have to have specific candlestick patterns to show a reversal, but instead, if you are actually able to get rid of all support and resistance levels and just look at reversal points, you guys will actually notice that it is looking at the overall picture of price that will really give you an indication if we are if we have any likelihood of reversal. Okay, so that is my key message here. Don't try to find that specific candlestick pattern. Read the overall surrounding price action, and if there are, for me, ultimately break it down into wicks and the size of the bodies of candles. That will give you a good indication if you are or have a chance or a likelihood of reversal. Remember guys, the more wicks you have to the downside, the more likely it is to reverse. More wicks to the upside, the more likely it is to reverse to the downside, okay? And again, the body and close of the candles are very important too. If you imagine you have a thick Marubozu moving up, but it ends with a very large wick to the upside, that isn't really a Marubozu showing you momentum to the upside, because again, it's ended with a large wick to the upside, suggesting that price has or slowed down to the upside. So we're actually likely to reverse to the downside, right? So if I quickly hop into the chart and show you that, look, for example here, guys, this green candle here, we can see that is a nice Marubozu to the upside, but look, we ended with a wick, right? And this is a great example because some guys out there will actually think that this is a nice Marubozu, but this is not a specific candlestick pattern. It's just showing a nice momentum to the upside, but because we ended with a wick, is likely for us to go down. So again, guys, don't be too fixated on patterns in particular. Read surrounding price action and try and get the picture as a whole, right? So anyway, guys, I'm going to end this video here. I hope you enjoyed that one. Like I say, you know, this was for all levels, this video. For beginners that were new to candlestick patterns, I went through all of them. But for you guys that are more advanced and looking at specific candlestick patterns at certain levels, this is what's important. Don't try to find a specific pattern. Try to look at the picture as a whole and try to understand that even if you have a certain candlestick that is showing you something, look how it opens and closes, and if there are wicks to the body. That is very, very important, okay? So anyway, guys, I hope you have a fantastic trading week. Take care and peace.